Hello, welcome to today's edition of Short Answers to Your Real Estate Questions. Today I'm going to talk to you about a big question many of my senior sellers have, and that is the tax consequences of selling your home. I'm not going to go into a full explanation of the tax code, but I'm going to answer the most common question, which is what happens if I sell my home and I want to, move into another home or maybe into assisted living. Am I going to get taxed on all that money as either income tax or capital gains? So, interestingly enough, the IRS has made the answer to that pretty easy. You can find it at IRS Publication number, I'm scrolling quickly, number 523. I'm looking at the 2020 version, which is still the current version on the IRS website. And it's pretty simple. So the first question you have to ask yourself is, were you or did you own the home for at least 24 months in the last 5 years? So 24 months out of the last 5 years you owned the home. If you meet that test, you've marked the first box and you're going to be able to exclude at least part of the gain, if not all of it. The second question is, did you reside in the house? Was it your residence? Their test is, did you reside in it for at least 24 months of the last 5 years? So, pretty simple test. They like that 5-year time period for when they're looking back on filings. So there's one more part of this test, and that's called the look-back requirement. And that means that the home that you want to exclude the gain from the sale of, has to be the only one you've sold in the last 2 years. So, did you own it in the last 5 years for 24 of the months? Did you reside in it for at least 24 months in the last 5 years? And is it the only home you've sold in the last 2 years? If you meet those requirements, then as an individual, you can exclude up to $250,000 in gain. And if you're married filing jointly, you can exclude up to $500,000 in gain. Those are the simple, quick answers. Now, I always advise you to talk to your tax advisor for the more complex questions, or if you have a more complex situation, because that doesn't cover every single situation for some people. And it also, maybe your house was worth more than that and you need to know, what do I do now? My house was worth $1 million and I owned it free and clear. I want to exclude the rest. So talk to your tax advisor. But in general, $250,000 for individuals, $500,000 for couples filing jointly, and it can be excluded if it was your residence, if you, for 24 months of the last 5 years, if you owned it for 24 of the months out of the last 5 years, and if you haven't sold another house in the last 2 years. As usual, like and subscribe if you like this kind of information. And we really appreciate any comments or feedback you have. And if you have a question that you'd like answered, post it in the comments. Thanks, everybody. See you soon.